Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for August 15th, 2012. Well, a change of trend today, and we have a candle that's made a lower high and a lower low. Previous day's trading, we had a small black-bodied candle with the sellers taking control of this market. Very strong price rejection from above the 123.28 level of resistance, and today a change of trend. A spinning top type candle where the sellers have closed with very weak control of this market. They've closed only just below the midpoint level, so they have taken control, but very weak control. But the sellers lost commitment down below the 122.87 level. We can see here the shadow on the bottom of this candle. And if we look at 4 of the last 5 trading days, we've seen rejection from that area. So moving forward for tomorrow, that will be a very important level of support at 122.87. We've also seen the market test down to the trend line here, and we drew the trend line through these troughs, and there is a possibility that we could see this trend change to the upside once again. Now, just remembering that if we do see a break of the trend line here, it doesn't mean that we have a break of the trend. All it means is that we have a slowing of the momentum that the trend was in. So just be aware of that. But generally we should see this area hold as an area of support. We also have the Kijun-sen trading just below there. So the Kijun-sen trading at 122.41 could hold as a very strong area of support as well. Now, just looking at the past Fibonacci extension that we examined yesterday, and we saw very strong price rejection for these 2 candles previous to today's trading at the 38.2%, and then a test to around the 50% that did set this market up for the change of trend, and combined with the sellers taking control on that candle did set the market up for this change of trend. We're looking at the current Fibonacci extension. We're examining the current first time frame downtrend the market's in relationship to the previous time the market was trending down, and here we see strong rejection from the 61.8% level at 122.60. We've seen the sellers lose commitment down there, so that does suggest that there is potential for a change of trend, so we do need to watch for a higher high and a higher low. But certainly with a black body candle and the sellers having weak control, we don't see any strength from the buyers, so that's significant. The other important thing here is that we saw the market fail to close below the 50% level, so that could be important as well. But the low, watching the low of this current candle is crucial. If we do see the market extend down below that low, then it's likely the trend will continue, and we should look to other levels, perhaps down around the 78.6 or even the 61.8% could act as an area of support today. Looking at the previous Fibonacci retracement, just going back to the past few days analysis, and we can see a strong rejection here from the 61.8% level for the past 2 days, and then the change of trend. So it highlights how well at times the Fibonacci ratios do give us very good guides for our trading. And the current Fibonacci retracement, if we're looking at the relationship of the current downtrend to the previous uptrend, and we've seen the market test down to the down below the 61.8% level at the 78.6 and be rejected from there, so that could be significant. But we have seen a close down below the 61.8%, so this doesn't really give us much of a guide. There is a small potential for a change of trend because of that rejection from the 122.71 area, but if the market does trade down, the 100% at 122.40 coincides with the Kijun-sen, so that will be very strong support for this market. But just looking at the Ichimoku, obviously the market remains bearish in the long-term time frame by trading below the cloud, and is remaining bullish in the medium-term time frame by trading above the Kijun-sen. We've been trading above the Kijun-sen for some time, but now also we are bearish in the short-term time frame by breaking out down below the Tenkan-sen. What we'd expect to see is the market find support around this area. We have a flat Kijun-sen, the market's been attracted back towards there on a couple of occasions, and we are seeing support come in around this level. Certainly the 122.87 level here is important. It has held for the past 4 out of 5 trading days, and If it's tested again, it's likely to hold a support, but if we see a bearish close below, let's look to 122.41 for support, and then support down around the 121.55. To the upside, resistance at the 123.28 level, and then some very strong resistance in a zone extending up to the 124 level around here. But some mixed signals in this market at the moment. Overall bearishness. The market is retracing back towards the Kijun-sen. Look for some support for the market to trade perhaps higher, but we are seeing quite a lot of indecisive trading at the moment, trading within this range bound by strong support below but very strong resistance overhead.